Your conference is being recorded.
Good evening, ladies and gentlemen, and welcome to Cyber Media Research and Services Limited Q3 FY23 earnings conference call. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note this conference is being recorded. Now I would like to hand over the floor to the Managing Director, Mr. Dhaval Gupta. Thank you, and over to you, sir.
Thank you very much. Welcome, investors. Dhaval Gupta here. Welcome to first of all, I'd like to wish everyone a very good afternoon. And welcome to the Cyber Media Research and Services Limited first investor call post the IPO. As many of you are aware, the IPO was carried out smoothly and with strong interest from investors across the country in each of the QIB, HNI, as well as retail investor categories. Some business performance key highlights that I'd like to jump into right away are CMRSL's top line increased to rupees 43.79 crores for the first 9 months of financial year 22-23. This is a growth of 18.3% over the first 9 months of the previous financial year, which stood at rupees 37.02 crores. PBT for the same time period, which is the first 9 months of this year financial year, increased by 42%. This shows a focus on us shifting towards better margin businesses. Q3 financial year 22-23 performance registered quarter-on-quarter top line growth of 20%, while PBT for the same time period grew by 32%. Some key highlights that contributed to these numbers were CMRSL continued to onboard new advertisers and publishers during the previous quarter and are looking at a healthy pipeline for the coming year. We also continue to invest in technology and improve our offerings to attract more customers both in India as well as abroad. CMRSL's data analytics business gained good traction as well. This contributed to better margins, a shift we are consciously investing resources towards. Some of the newer customers and relationships that we onboarded in Q3 quarter include EPAM Systems. This is an international technology enterprise. Manipal Health Enterprises, JioSaavn, Bazar Patrika, ABP Group, Berto, Bickerton, Prabha Sakshi, and Tusker Global. Let's move on to the IPO funds utilization. We have been utilizing the funds as planned to expand our technology and go-to-market resources. This is already underway and will show results in the coming quarters and years. CMRSL is also looking at possible new projects as earmarked in our RHP. The necessary funds have been set aside, and we are exploring projects that generate both organic as well as inorganic growth for the future. Since our IPO, another important point I'd like to mention here is since our IPO, as promised to investors, the parent company has settled all its NCLT and DRT cases, and therefore there is no contingent liability on CMRSL as a guarantor. This is a major step towards better financial health of CMRSL and creates a good foundation, a strong platform for, again, future growth. In line with above, our long-term views continue to be strong growth in line with the industry trends. As our IPO fund utilization activates, we are looking at setting consistent growth in the coming quarters and years. With that, I would like to open the request the investors to kindly share any questions they may have, and we can initiate that interaction. Felicia, over to you. If there are queries that we may have received, perhaps you can get us started on that, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on your telephone. If you wish to remove yourself from the question queue, you may press star and one again. Anyone who wishes to ask a question, please press star and one on your telephone. Participants are requested to use handsets while asking a question. This question comes from Chirag Das, PA and Associates. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yes, sir. So, sir, my query is regarding the demand environment. Sir, how do you see the export market currently setting? Because it is currently, I think, 50% of our revenue. So, any slowdown and what are we doing to mitigate the same? If you can please clarify.
Yeah. So first of all, thank you for the question, and very relevant given the macroeconomic nature of a lot of sort of international markets. The business that we have been doing with international customers that is primarily based out of Singapore has seen downward pressures on it, and there has been a challenging environment, particularly when we talk about some of the more developed economies, due to recessionary situation. Having said that, in order to, for us, we have clearly been looking at revenue streams which are adding to what we are already doing and also moving towards higher margin business. So, in line with that, we do see this as an opportunity. We do feel that this is going to enterprises, international organizations are looking at more and more cost-effective solutions, and we expect a good bounce back for the international business for CMRSL in the coming quarters.
Sir, higher margin business in the sense, currently in Q3 also our margin was around, I think, 7%. So, and during pre-IPO we had guided above in double-digit margin. So, when are we going back to those margins? Because our monetization phase should start, product development phase is over. So, what is linked at the margins? If you can guide on the margin trajectory for the next quarter and for the next year also.
Yeah. So, in terms of the margins, as I mentioned earlier, and if I can take a step back to talk a little bit about the history, and I think this is something we had mentioned pre-IPO as well, is that we have clearly been transitioning our revenues from a service-oriented business to more product-oriented business. As soon as we look at that for programmatic as well as data analytics, as well as a SaaS offering, those revenue streams are at a considerably higher margin business. So we are in the process of continuing to transition towards these revenue streams, and as they grow, we will move towards double-digit margins. In addition to that, I think next year we will be definitely looking at continuing to improve our margins, and yes, look at how we can get very close to or exceed on the double-digit margin aspect.
And I also, this is Pradeep Gupta. I'm the chairman of the company. So just wanted to add one more thing. In terms of the technology investment, we are taking that as revenue expenditure. Only 75 lakhs in the last year was capitalized. And therefore, if you look at the long-term scenario once again here, because we have taken it as a revenue expenditure and we have not capitalized that expenditure, you will find that as the results from those technology investments start coming in, we will be heading towards the double-digit market.
So can we expect these operating leverage to kick in from next year, and how is the deal pipeline? And also, please kindly give the shareholders a 2-year outlook, at least 2 to 3 year outlook, so that it will be helpful for us.
Sure. So, in FY23-24, like I already mentioned, we are expecting a bounce back, and we are expecting a significant shift towards, better margin businesses. While we do not give forward-looking numbers, also as we are looking at growing in line with the industry growth trends. In fact, if we talk about how the advertising industry is evolving, we are, I think, in a very good spot to capture gain market share and gain customers. And so we are looking at definitely creating a growth pattern which is ahead of the industry figures.
My last question, supply side, any challenges you are seeing in retaining talent or hiring of talent? The demand side in India, I think things are quite good. So please kindly share us about your supply side challenges also.
Right. So as far as the manpower and teams are concerned, we have expanded our team. We have invested more in experienced team members coming in, and this is for the technology side of the business as well as the go-to-market stage. As far as operational is concerned, we have been improving processes, bringing in tools, so that there is improvement in performance, for operationally throughout the teams and all across the organization as well. Overall, we have had low attrition rates, I think, compared to industry averages, and that shows that there is a excitement in the team and there is a focus towards moving in the right direction.
Sir, thank you, sir. Sir, also last question, any competitive advantage specifically, please, if you want to highlight?
So I think the competitive highlight is first and foremost the fact that we continue to be aggressive on both the demand side of the ecosystem, which is the advertiser side, as well as the supply side of the ecosystem, the publisher side. And the data that we are continuing to collect is giving us an advantage. And that's where the data analytics side of the business is also showing good performance. So that's why I would definitely one unique value proposition. As I mentioned on the tech front, we are starting to get more and more traction from international customers where they are paying us directly for the products and for the technology. Right? So that is very, very a good step in the right direction. And we expect to push on that agenda and grow that for the coming financial year. So all the three technologies, which is EM Galaxy for the advertisers, Cyber Ads for the programmatic piece, as well as also ads for the publisher side of the business, are continuing to add back in more functionality, more data analytics, and so that is giving us a lot of stickiness with the publishers, with the customers.
So these are the three platforms only, or any new platform also we are adding?
So these are the three platforms that we are focusing on, and within these three platforms, I can give you examples of how we are adding in more and more technology, which is giving us again more revenue streams but better. So that's what's exciting for us moving forward.
Basically, you're adding layers from the top of it, like.
Exactly. Absolutely. So we want to be able to also reach out to very large enterprises, and we also want to be able to make sure that we have a very good offering for SMEs. So as the industry is evolving, for example, recently you would have all heard in the news about the evolution of AI, and AI is something that is, I think, going to change the industry very rapidly in many ways. Now, this is a big opportunity for us as well. And we are very excited by it. We are looking at it very, very closely. And, we want to make sure that, we are ahead of the curve when it comes to leveraging some of these technologies. So this is a very exciting time. And I think the next year, vis-a-vis some of these technologies is going to be very important and exciting.
Sir, I'm wishing you all the best. So your margins and your numbers also, I think, for next year, let's hope for best. So good results.
Thank you, Nidhi. Thank you.
Thank you. Next question comes from Amit Mehta from Sunidhi Securities. Please go ahead.
Thank you for giving us the opportunity. Opening remarks, you mentioned that for the 9 months, the revenue grew from by 18% to 43 crores.
Right.
But 52%, but the amount you have not written. Amount 9 months PBT.
So the 9 months PBT is just, okay. 9 months PBT was at my computer is
Also, I can't find the results on the NSE website.
Hey, what was that? Can you repeat that, please?
I was not able to find the 9 month result on the NSE website. Yeah. Is it available on the company's website?
The 9 month results have been submitted to the exchange. I'm not sure why. We will. I will request our company secretary to immediately check that post this call.
Yeah, it was submitted on NSE platform, and you can also visit our website www.cmrl.net.
I'll get it. Yeah, but can you just share with me what is the PBT for the 9 months and for the quarter also?
Yeah. So just give me 212. 212. 212 is for the 9 months.
2.12.
That's right.
For the
152. Yeah. So for the previous year it was 152 and it is now 212.
Okay. What is for this quarter? How much is the revenue and the PBT?
For which quarter?
The third quarter.
Third quarter has been applied. My system seems to be just lagging. I'm just pulling it out once more. Give me 15 seconds. 16.54 crores. Yeah, 16.54 crores was the revenue. EBITDA was 180. Yeah, EBITDA was 1.18. Sorry?
PBT?
PBT specifically for quarter 3 was 93.
0.93, correct?
Yeah, 0.9.
Okay. Now, about regarding the margin, you just said that the company is in a transition phase, moving from the service-oriented business to product-oriented business.
That's right.
So, in the current year, current 9 months turnover of say 44 crores, okay. How much revenue is coming from the service-oriented and how much revenue is coming from the product-oriented?
So, at the moment, bulk would be definitely from via services. Having said that, when we talk about our programmatic offering as well as the advertiser side offering, we are now having about close to a dozen paying customers there, and there the margins are better. So, I would need to, I don't have that specific number on my fingertips, but approximately, I would say 95% would be services and about 5% would be product. It's early days.
And going forward, what is the mix you feel that you want to achieve in terms of revenue between product and service?
We would increasingly want the product revenues to grow, by at least 100% year-on-year. So the product-based revenue earnings, we want to double that, and that is what we are planning in the coming year.
And last time during the call, you have said that Google is the biggest customer, which contributes about 35 to 40% of the revenue. Is that correct?
That's right.
So they are still the largest one, contributing 30-40%?
That's right.
And also, we were expecting some type of inorganic growth through some acquisition of the right fit. Is there any more development on that front?
In terms of, as I mentioned earlier in the call, we have earmarked and set aside in line with what we had mentioned in the RHP for new projects as well as inorganic growth. We are looking at these very, very closely and, are in the process of. I also want to be very cautious and mention that, for us to move in that direction, we want to make sure that, it is also an opportunity that is available at the right price. Right? So that is something that we are very conscious of, and we are continuing to work on that and look at that for the future. Any acquisition should give us a multiplier effect and not just be a 1 + 1 = 2. But yes, the short answer is that we are looking at this area closely, and we are putting our time on it.
You also, regarding the growth guidance, you say that you will grow little better than the industry growth. Okay, but when you look at our size of the company, we are quite small in the entire size of the industry. Okay, so don't you think that considering the size of our operation and the size of the market opportunity, okay, and where you have also planned to increase the market share, okay, don't you think you can grow much faster than, because the base is smaller, you can grow faster than the industry growth? Is that assessment is right?
Yeah, so you are absolutely right. In fact, if you look at our performance from 2020 financial year 21-22 to 22-23, we did grow by about 90% that year, right? So we went from about 30 odd crores to about 57 crores. Even if I talk about the last 4-year growth in terms of compounded annual growth rate, have grown at about over 30%, about 30%, right? And in fact, in the last 3 years, we've grown a compounded annual growth rate of 14%. So the history shows that we have been growing at a faster pace compared to the industry. We have been aggressive in the market, and that is something that we absolutely aspire to continue in terms of our performance. Having said that, I also think it is wise to make sure that we don't sort of mislead investors by over-promising. Right? So we want to take a tempered, a realistic approach to this. Also, I want to mention that, again, when we shift from services towards products, there is a little bit of transition impact that comes, right? Where, there is a sort of, we have to transfer those customers in a way towards the different revenue models. And that may have a little bit of impact in terms of how sort of the consistency may be. So that transition is not a big concern, but at the same time, we want to give guidance which we are confident of. And having said that, aspirations are for higher growth, and we will continue to look at that, and not just higher growth, by the way, also definitely at a better margin.
Okay. So just translating what you have mentioned. Okay.
Yeah.
We have already reported almost 40 crore of revenue for 9 months. Okay. And out of that, the last quarter was 16 crore. Okay. So that means, considering the current run rate, we may end up, roughly around 55 to 60 crore of the revenue on the minimum side, annual revenue. Okay.
Sure. Right.
Now we have already raised funds, to invest in the technology and for the go-to-market strategy. Okay. So that means, the funds which we have raised will help them to grow better. Okay. So considering all these things, when do you think we can go to a 3-digit revenue, annual revenue? Is it possible in 2 years? Do you think that with the money which we have raised and the product which you have, and spending money on the go-to-market strategy, we could be a 3-digit annual revenue company?
Yes. Okay. Very clearly, I think that is a yes.
Okay. So, the growth, for the forthcoming years, okay, will be higher margin growth. Is that assessment correct?
Correct.
Okay. Thank you. Thank you.
You're welcome. Thank you for the question.
Thank you. Anyone who wishes to ask a question, please press star and 1 on your touchtone phone. I repeat, anyone who wishes to ask a question, please press star and 1 on your touchtone phone. We'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 on your touchtone phone. We have a follow-up question from Amit Mehta from Sunidhi Securities. Please go ahead.
So, being an SME listed company, and sometimes it is very difficult to know on the business update side about the company. I request if you can, quarterly basis, if you can send the business update, okay, to the shareholders. Right now you have less number of shareholders. Receive such updates from other SME companies on a regular basis. Okay, so that will keep the shareholders updated and posted about the company. It's not easy to go and penetrate and find out the information about the SME company.
Yeah, Amitji, thank you for that feedback, and we absolutely will be doing this. We had already determined to do that, and we'll start providing them that from once this quarter's results come out, we will start providing quarterly updates. The way here, just a quick note on that, what we are planning on doing that is we will provide quarterly updates to the investors, and we of course releasing quarterly numbers to the stock exchange. However, in terms of the half-yearly in terms of the investor calls, we will be conducting them on a half-yearly basis. Having said that, any investors that have any queries, I would welcome them to please write to us, and we will ensure that we try and respond to those queries within 48 hours. And so that is, that's how we are currently planning to go ahead.
How the order pipeline for the business, lead looks like, like you said, you have added about 4-5 new customers onboarded during the Q3. Okay. How that looks in the coming quarter?
No, so in terms of the adding 4-5 customers, I don't think I mentioned that. We're actually adding more number of customers. Right? I think that was specific. One of the revenue streams, one of the businesses. We're actually adding more customers for advertiser side, for the data analytics side, and so on. And in overall, the forward-looking pipeline is quite strong. We are able to be more aggressive in the market as we are expanding our GTM team. And therefore, at the moment, we are looking at a much bigger pipeline and a sort of more aggressive outreach to the market. And this is not just in India. This is for the international customers as well.
So unified names which were taken were essentially the marquee names amongst the new customers we launched.
Right.
You have 50% revenue coming from the Indian market. So you only operate from India. You also have a rep office in Singapore or any other country?
Yeah, so we do have, so within India, we operate out of Delhi, Gurgaon actually, and Bangalore and Bombay. So these are the areas where we have offices. And we also have our office in Singapore and have a 100% subsidiary based out of Singapore. We do have a Singapore office, and the Google relationship also that we have is based out of, with our Singapore entity with Google Singapore.
Singapore, how many people is on the payroll?
So we have one person there, and but we are sort of looking at how we can expand our footprint there as well.
And has we added and the business development in last 6 months post IPO?
Yes. So post IPO, we have added a few headcounts across the team. So we have added the GTM and sales in the publisher side of the business as well as the advertiser side of the business. And that is something that we will continue to do through this quarter.
Thank you.
Thank you, Amit.
Thank you. Anyone who wishes to ask a question, please press star and 1. I have a follow-up question from Chirag Das from PA and Associates. Please go ahead.
Yes, sir. Please kindly share us the domestic versus exports. What is the segmentation currently? And moving forward, how do we expect the segmentation to be? And whether the exports are a little bit better margins compared to domestic on that. And you mentioned about the transition impact from service to product. Whether it is a minuscule impact or it is a significant impact which can keep our margins suppressed. I want to little bit color on that.
Sure. So in terms of the breakup of the team, approximately, so we today have a team size of about 65 people, and the broad breakup would be that 20% of the team members would be in sales. The tech team would be about 30%. 30%. The operations team would be about 35-40%, and then the rest would be admin. Finance plus admin. Finance, legal, and admin.
And my question is mostly on the sales segmentation, domestic versus exports. From our turnover, how much is coming from the domestic and how much from the exports, and which is higher margin for us? So, or both are similar?
Out of the 44 crore or so of revenue that we have done, about 29 is domestic and 15 is international.
Going forward, sir, how it will take up, and which geography are we focusing on in international?
So in international markets, we are seeing traction in the US market as well as Australia, New Zealand, and Singapore. And we also are getting good traction out of the Middle East market. So these are the four markets: the US, Middle East, Singapore, and Australia, New Zealand.
So there are currently some budget cut is there, which is putting some pressure on us, or the deal pipeline is strong, and if you can little bit on that.
So deal pipeline is strong, and the challenges in the international market is for us. We are looking at it as a opportunity in the coming quarters, right? And we think that the customers are going to be looking at more cost-effective solutions as well. And as I mentioned, we have already started onboarding customers on the product side there, and so we are we're quite expectant of gaining more and more traction in the international market.
So let me just add that like in the past in the software industry, international slowdowns actually used to turn out to be beneficial for Indian companies, because they were then able to work on the more cost-effective solutions. So we do expect that the same kind of a thing will happen here as well over the next 4-5 quarters.
Okay, sir, and the transition impact that you mentioned from service to product, is that a significant impact or nothing substantial, or you can explain a bit on that?
So effectively, we are looking at definitely having a smooth transition, and where we are focusing is on ensuring a cross-sell and upsell strategy that we deploy to ensure that not only are we continuing to work on the services part, but we also earning more from the same customers on the product side of things. So that's the strategy, and that's the approach that we ideally want to take. In the future, of course, what also happens is that it increases the number of customers that we can onboard, because some customers may only want product and not services. So that option is also available to us, and that's where I think, in fact, a lot of the international customers are going to be interested in working with us.
And my final questions are for FY23. As you mentioned, we can expect 3-digit sales and margin at double digits. So that is that we can at least from a conservative side we can expect.
So 26, I think for 25-26, that would be definitely something that we would reach.
Except for FY25.
That's right. 2 years.
Okay.
24-25.
Yeah.
2 years.
24-25.
24-25.
Okay, sir. Okay. Thank you. And best wishes.
Thank you. Anyone who wishes to ask a question, please press star and 1. I repeat, anyone who wishes to ask a question, please press star and 1. repeat, anyone who wishes to ask a question, please press star and one on your touchtone phone. There are no questions. Now I hand over the floor to the Managing Director, Mr. Dhaval Gupta, for closing comments.
Thank you, Felicia. So, dear investors, thank you so much for taking the time out from your busy schedule to join us on a Friday evening. We feel a lot of sense of gratitude and towards the investor support that we have received. And we are, it is our endeavor to ensure that we are working towards reposing the faith that has been given to us by the investors, and ensuring that we move in line with the guidance that we have been able to give today. Right? So thank you so much for your support and your confidence. And please, do feel free to reach out regarding any queries that you may have in the future. And with that, I'd like to bring this call to a close. Thank you very much, everyone.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsaba's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.